Hello ladies and gentlemen, welcome back to the channel. Today I wanted to show a video of my portfolio and all the investments I've made throughout the course of 2019, because if you guys didn't know, I did just start investing in 2019, which is also when I made my channel. So a lot of good growth that I've seen, a lot of solid investments, and a couple good or a couple not so good investments. So I'll dive into that in this video and just kind of break down what my moves were in 2019. So hopefully you guys can potentially learn from any good moves I made or any mistakes that I made, and feel free to leave in the comment section below one of your best investments and potentially one of your worst investments. I'm sure a lot of people would love to hear about those as well. Before we get started, go ahead and hit that like button and subscribe to the channel if you aren't already, so we can continue growing and continue making great videos here in 2020. So as you guys see, and as you guys know, I did switch over to Charles Schwab. I started out on Robinhood, which is a great platform for beginning and even for some more intermediate to advanced investors. But I do think Charles Schwab offers has a couple more capabilities, such as research tools and things such as that a Robinhood lacks, or some of these other companies lack. And Charles Schwab is the biggest investing platform now with their acquirement of TD Ameritrade. So let's get right into it. As you guys see, I have about $1,700 in personal value in my portfolio. And I did put back $75 in this portfolio, so there's a little bit more growth, because when you guys do transfer account, at least to Schwab, there is a $75 transfer fee, so they can get all your assets over without having to pay taxes. So it's essentially like you never did anything at all except for having to pay that $75. So there was a little bit of dividends that got taken out of it. I believe I lost about $11 in dividend, so I only had to pay like $64 in the transfer fees. So let's get right into it. As you guys see, today's change was about $3. Let's see if I can't pull up. Let's do year to date. Okay, 6 months. This might be a little messed up since it did just recently get transferred. Yeah, I don't think it's going to fully show me. The day I finally got it transferred all over was the 31st, and as you guys see, I had $1,514.24. So not too bad. Great place to start. And to think I started out with a free share of Zynga, I believe it was, and for the longest time I had a $6 share sitting in there, probably for about a month. And I finally decided to put $100 in there, and it just kept compiling from there throughout the summer, working a summer job. I was able to funnel a lot of money and really hit this hard to grow in things such as dividends, and just kind of put my money in a good place rather than just a checking account where I'm not earning any interest on it. So let's go back to year to date if we can. So that's not 100% accurate. Let's see, 1 year or max, I guess. Okay. So there we have it on max. So as you guys see, I've made $163.38 over the course of the year. It hasn't been quite a year yet. It's probably been about 8 months, because I do believe I started investing in April of 2019. So what is that, 7 or 8 or 9 months? I'm up about 11%, which is good. The stock market was up quite a bit, obviously. So I didn't beat the market, I do not believe. And we can check that real quick. What percentage is the stock market up this year? Or maybe I should have put 2019. Let's see what pops up for us. Is the stock market up 2019? I don't know if it's going to tell me for sure. Not down. I don't think it's going to tell me, but I do believe it was up like 15, maybe even more percent in 2019. So a very good year overall for the stock market. As you guys see, I do have 2 accounts. I opened my Roth IRA mainly because of the fact that they announced fractional shares, but obviously it hasn't been implemented yet. So I could buy these bigger ETFs and start putting money away for retirement that isn't going to be taxed, or that is post-tax, so I won't have to pay taxes on it when I withdraw at the age of 65 or 64 and a half, whatever it may be. And you can put in up to $6,000 a year, $7,000 in some tax bracket, or in certain situations. So as you guys see, most of my money goes into my individual account, and I have about $10, $11 in dividends that I've yielded since I paid off that $75 transfer fee. So as you guys see, down 0.17% today. And here's my positions. It isn't ordered in biggest position. Let's see. Okay, so my biggest position, let's see here. So my biggest position, I guess if we order it by market value, is going to be Disney. And we all know what Disney is. It's a massive company. They own so many different things. They have theme parks. They have a streaming service now. They have so many great things to offer. I'm super bullish on Disney. And as you guys see, it's right around $145 per share. Price change today was 0.05 cents. I own about $300 worth since I have 2 shares of it, and I'm up about $18 on it. I believe I bought both shares right around, I think I bought the first one around 135 and I bought the second one around 132. And as you guys see, since it's up 145, I'm up about $20 per share on that. So doing very good on that. Then we have Tapestry. This is one that Jeremy at Financial Education talked about quite a bit. They own companies such as Kate Spade and Coach. If you guys don't know what those are like more geared towards women. They have things such as purses and outfits and accessories and stuff like that. As you guys see, the price per share was $27 currently, up about 26 cents today. Almost have $250 in the market value here, and I'm up $26. So not quite my biggest one, but it is up almost 12% on Tapestry, which is very good to see. I don't know whether it's going to tell me what I bought this at, but I do believe I bought Tapestry about $20 a share. And I know Jeremy got it for about $18 a share. So he really scored big on Tapestry. That was a good call on his end. And I do believe they pay a good dividend as well. So I'm raking in the dividend with that good growth. From that company. Next, we have a company that I'm not doing super good on. As you guys see, I'm in the red. One of the 3 companies that I'm in the red on is Pfizer. I bought them around $40 a share, I do believe. And they've just been hit with different things such as, drug issues, because they are a drug company. You may have seen, I'm sure you guys have seen some of their products on TV, and if you look at the end of the commercial or whatever it may be, it does say Pfizer in the corner of some of them. I know they make daily vitamins and stuff such as that. They were down, I believe it was, let me exit out of that real quick. I'm getting a lot of pop-ups. They were down, I believe, close to $34 a share, and thank God they're back up to 38 and at 0.75, because I do believe I bought in around $40 and I cost averaged down to that $40 range. So I would have been down in a major hole, and I was for a little while, and I almost sold out of them, but I just decided to hold on to them because they do pay a solid dividend. But as you guys see, I'm down $10 on them. Next stock is Archer Daniels Midland, up a good bit on them, up about $30 on them. The current share price is $45. And I have about $225 in market value on them. Today's change is $2.75 in the red. Archer Daniels Midland, if you guys don't know, is a company. They specialize in agriculture and things such as crops and soybeans and corn and all sorts of different crops, as I said. And I believe they do research and development and things such as that in those areas. And obviously there was some bad news on them. I was down slightly on them for a little while, but then the trade deal with China, and they started buying more things such as like soybeans and stuff like that from America, and they have since gone back up. Another really good dividend stock. I do believe they are a dividend aristocrat, so main reason why I bought into them. Real safe stock, real good company there. Next company is the biggest gainer in my portfolio so far is AT&T. They're about $40 a share today. I have about $200 in market value, and I really wish I bought more of them because I do believe they were down, but they were at the $28 range or something like that. And I bought in around 30 or 32, so I did a good job on them, up about $36 on them. Excuse me. So very good company, very good dividend that they pay. I do believe they're also a dividend aristocrat. So again, a very good company. I have 5 shares of them. We're going to kind of skim through these next couple ones. KeyBank, if you guys don't know what that is, KeyCorp. I have 7 shares of them. Up a good bit on them, $18. they're just kind of more a regional bank. They aren't the biggest bank in the world. They might actually stretch across America in terms of where their locations are, but I do think they're also more of like kind of, they're definitely a smaller bank, but they do pay a good dividend. And I do like them as a company. Next, we have Weyerhaeuser. I probably butchered that, but that's okay. I have about $13 with them. If you guys don't know what they do, they make, I believe they're mostly like a paper company, and this says they're a REIT. Let me actually click on that. If my internet will work here. Does not look like it's gonna load for whatever reason. Let me go back. Oh boy, I have no idea what's happening. Let me just Google it real quick. Weyerhaeuser stock. Let's see if it gives me a brief synopsis of the stock and what they do. Maybe. Let's just Google Weyerhaeuser. So Weyerhaeuser is an American timberland company which owns nearly 12.4 million acres of timberland in the United States and managing an additional 14 million acres of timberland under long-term licenses in Canada. The company also manufactures wood products. Weyerhaeuser is a real estate investment trust. So the main reason I invested in them is because of the fact that they have a really good dividend since they are a REIT. I don't know whether it's monthly. I don't think it is monthly, but it might be. And like I said, their dividend is really solid, and I'm up a little bit on them as well. Next company is Delta Airlines. The name speaks for itself. It's one of Warren Buffett's favorite companies. Great dividend on that stock, up a little bit on them, but got a good buy-in point. Next is L Brands. If you guys don't know what that is, it's kind of the parent company of Victoria's Secret and Bath and Body Works, I believe it is. And Victoria's Secret's been going through a rough patch recently, so that's kind of weighing it down. But Bath and Body Works is thriving. Go to a Bath and Body Works in the mall today or tomorrow or over the weekend, and it will be packed. I promise you that. So just down 30 cents on them, not a big loss. And as soon as Victoria's Secret figures out their stuff, this stock should go up to that $24, $25 range, in my opinion. But they also pay a really good dividend. So if nothing else, if I don't get a good bit of growth out of them, which I'm hoping for, I should be able to get that dividend. Next, we have Apple Hospitality REIT, which is, again, another REIT. This is a monthly dividend stock. Only have 3 shares of them, up 20 cents in them. Not expecting a lot of growth out of them. They invest in hotel chains and stuff like that. They own hotels, and that's how they make their money. And the very last one is just a real small share of Nokia. And the only reason I haven't sold out of this is because of the fact when 5G, that was all the rage there for a while, and it really wasn't even, it's not even really implemented all that much. If you go out and buy a 5G phone, you're not even going to really be able to use it except for in super populated areas where there is access to 5G. I only held on to this because they do pay a dividend. It's nothing special. And because of the fact it's like $5 a share, and I've lost 88 cents, so I've lost almost $1 on this because I do believe I bought in right around $5. My hope is that it potentially rises to like 8 when 5G truly gets fully implemented. So that's my hope there, and maybe I hold on to for the dividend. Maybe I'll sell it at that point. I'll probably sell it at that point because I will have held on to it for a very long time. So that's going to do it, guys. Hopefully you guys enjoyed this video. And again, in the comment section below, let me know what your best stock of 2019 was. And hopefully we'll see a lot of good growth in 2020 and a lot of good buy-in points in 2020 if there is some sort of correction. Hopefully not a recession, but a correction would be nice since stock prices are so high and there aren't a lot of great buy-in points currently. And go ahead and hit that like button if you haven't already, and subscribe to the channel if you haven't already, and we'll continue this journey together. And until next time, guys, happy investing.